Before we start, I want to take a minute to talk about our friends at Bitwise. Bitwise has a lot to offer to people like us who live and breathe crypto every single day. They're a crypto asset manager with more than $10 billion in client assets. They've got the world's largest crypto index fund, one of the top Bitcoin ETFs, crypto equities ETFs, on-chain solutions, you name it. And they've been doing it since 2017. These guys are pretty much OGs. But I think one of the coolest parts about Bitwise is how in sync they are with the crypto community. They donate a percentage of profits from Bitcoin and Ethereum ETFs to open source developers. They were like, if these products are successful, we should give back to the people who work to keep Bitcoin and Ethereum up and running. Makes complete sense to me. And people really respect that. It's a good thing to know that you're investing both in crypto products and contributing to the ecosystem that makes it all possible. So check out Bitwise, go to bitwiseinvestments.com and see all they've got to offer. That's bitwiseinvestments.com. Or just email them at james@bitwiseinvestments.com and let them know REKT brought you over. There are a million ways to access crypto. Do it with those who care about the ecosystem. Look for Bitwise. Please remember to carefully consider the extreme risks associated with crypto before investing.
Hello again. Sorry I was not here last week. Bit of a family emergency, you might say. But I am back again this week for REKT Vision, our update on the crypto markets, even though everything seems to be going sideways for a few weeks now. Awesome to see you again at OSF. How have you been without me?
Yeah, it's things have been okay. I was kind of out a lot of this past week, so it's really nice to come back and see markets are basically at the same price as it was a week ago, with all that random chop and volatility in between. I think again, like if you look at the weekly move on Bitcoin, we're up 3% on the week, which I guess is nice. ETH is up 5% on the week, some outperformance, which is nice. So yeah, I guess we are up a little bit on the week across the board, but it doesn't really tell the full story of everything that happened yet again, as the chop continues and cries from crypto Twitter everywhere saying stop the chop.
This isn't, I mean, we've been in chops for much longer than this. What has surprised me is how narrow the range is, right? Like we've just kind of bounced around this 83, 84K level. It feels like we could be in there for a while, in my opinion. Maybe we'll go through the macro week, because it was meant to be a very, very volatile macro week. And we did see some volatility. We went down to around 80, went up to around 87, 88, back to 84 again. Bitcoin dominance has gone back up to around 62%. In general, altcoins have continued to underperform. But it definitely doesn't, the fear, I don't know if the fear is still there. Are you still fearful of us going down to like 70K or lower here?
Not really. It does feel like to me we seem to have found a floor and found some stability at current levels. I think there was a couple of times we went into the 70s and that got bought up relatively quick, such that I don't know if we've had any daily candles close in the 70s. I think we've always I think the lowest actual candle close may have been 18.5 or something like that. So to me, it feels like we've seemed to have found a bottom. That doesn't mean that we just V-shape back up, and I still am maintaining we're in for this period of sideways price action, some volatility, some chop. But it does give me a bit more confidence to be like, okay, maybe this is now the level where I should be adding some more risk, and just DCAing a bit more heavily, basically, just because it seems to have found a floor. The panic feeling seems to have left the market now. It just now seems to be more frustration rather than panic, I would say.
Yeah, I think if you've been around crypto for long enough, you kind of know that we're in a period of chop here, and it could stay like this for a decent period. This week we did have quite a lot of different like macro pointers, though. I think maybe to touch upon. We had 3 different central banks coming out, all not really changing rates at all. Although the Fed, in my opinion, was a little bit more hawkish than I thought that they would be. they pointed to the idea that we'd have inflation, although they used that classic word transitory, and they reduced their growth expectations, and they said that quantitative tightening was at least probably going to come to an end. Still only 2 rate cuts expected though this year from them. The market seemed to like it, and then just kind of returned to being around 84K. Like, we've spoken about the idea that the Fed and generally global liquidity going higher is probably the major tailwind for this year. It didn't really fill me with a ton of confidence that they're about to just like turn on the taps or immediately pivot. What was your take of it all?
My base case was that we would not see a dovish Fed this month. I think we've started to see data weaken. We've started to see inflation come a little bit lower, payrolls come lower, but I don't think there's enough movement on the table for the Fed to pivot or do a U-turn or give any meaningful message that was different to the last FOMC. And remember, the Fed is looking more at stuff like inflation, labor market, etc., rather than stocks. So, I think anyone who was expecting the Fed to be materially dovish this week, maybe were thinking about stocks and the move in risk assets, and I think that's less important for the Fed. So that's more of a byproduct of what happened. So my expectation was we wouldn't see anything that was meaningfully different from the last FOMC, and that's generally what happened. However, the next FOMC, I believe, is in May, towards the end of May, and so we should have 2 months worth of renewed data until then. And if we see these trends continuing, so if we see two-handle inflation persist and drift lower, if we see payrolls continue to drift lower, then I think you will start to see the Fed become more dovish. And whether we pivot straight away or whether you start to see signs of a pivot, I'm not sure. But that, for me, is a timeline. And I think that dovetails quite nicely, or not nicely, if you like, with the whole 6-month chop thesis and the fact that it will take time for us to break out of this. I think that is the timeline. And just given the price action we've had, towards the end of last year, after Trump's victory, I think the market is a little bit spoiled in terms of instant gratification, things happening right away. And still everyone wants the moves to happen tomorrow. They want that V-shaped rally. They want Bitcoin back at 100K and all this stuff. And they want it to happen like right now. They want it to happen yesterday, but it's not going to happen like that. It will just take some time, and it'll take some time for risk to consolidate and clear. But that timing for me makes sense, which I think sets up for a potential summer rally should the data go the right way and should Powell step up and start to become a bit more dovish. So
yeah, I felt like on the back
line,
on the back of that, I felt like May wasn't going to be a rate cut again, in my opinion. It felt, but you may get more dovish commentary. That's what I felt like.
I don't think it will be a rate cut. My expectation is still not for it to be a rate cut, but I think May could set the stage for potential future rate cuts. Like, I think a surprise rate cut when the market isn't expecting it is not necessarily a good thing. I think it causes a little bit of panic. Whereas when a rate cut starts to get telegraphed and then it eventually happens, I think it gives time for the market to digest it and become constructive about it. So I think the Fed are kind of aware of that as well. Like, I think if they just immediately slash rates, it would just be people be like, whoa, like what the hell? We must be in a really bad spot. So again, like, the data is like really, really terrible for the next 2 months, then maybe you might see it. But again, that starts to get baked in. So I don't think we see any surprise rate cuts. Maybe I don't think we even see a rate cut in May, but from May onwards, I think you maybe start to see more rate cuts get priced in, whether it's this year or whether it's over a 12-month period. I'm not sure. But I think the tune starts to change in the second half of the year.
Man, we're going to be doing this show for the next 6 months and nothing's going to happen, isn't it? Bitcoin's going to be at 83K. We'll be talking about a rate cut in September, hopefully.
Well, what does happen is when Bitcoin ranges for a while and ETH ranges for a while and majors range for a while, you do have pockets of performance from other stuff. And in 2023, that was maybe like memecoins and Pepe for a little bit. Obviously, you have memecoins in 2024. So I do expect, I think if we continue to range like this for another 2 or 3 more weeks, I do expect something to just come out of nowhere and start doing really well, because those are the environments where people get, sidetracked into experimenting with other things. So maybe it's not right now, but I would keep an eye out for developing narratives, I would say.
It does feel as though the fear factor is still in stocks. I don't know if you would agree with that, but like you're starting to see, you've seen the biggest reduction in equity allocation by fund managers for over a decade. This was the fastest correction I think we've seen in something like 7 years, like from all-time high down, or one of the fastest corrections in the last 2 decades at least. I think COVID must have been quicker than that, so maybe I'm wrong on my stats there. But it does feel as though this has caught people off guard. This whole Trump trade, where you own like big tech alongside maybe energy stocks, Tesla, Trump media, all of that has been destroyed. And it's interesting to see that like part of the narrative actually coming out of TradFi is that Bitcoin's been outperforming. Bitcoin's still one of the best performing assets since Trump got elected. It's like it's Bitcoin and it's China stocks. Yeah, we're down from 100K, like 110K, but it is interesting to see that like it's still being seen as a pocket of almost outperformance since Trump, or at least in that Trump basket of things that were meant to do well. And I think that's a very interesting narrative that I think, and we spoke about this last week, I think could actually persist, or 2 weeks ago, could persist even if stocks go a little bit lower. I think Bitcoin could continue to kind of outperform, let's say, stocks here, and probably keeps up its correlation with things like empty money supply and gold. It still feels like stocks with the rise of China, particularly on the AI side, all these new models, a lot of the announcements around self-driving cars, around DeepSeek, Baidu, some of the robotic stuff they've been announcing is really challenging like some of the Magnificent Seven stocks. And that could be a bit of a medium-term trend. I don't know, but that could drag the stock market lower, even if global stocks stay relatively elevated and gold keeps on pushing higher. So do you think we're in this sort of market where Bitcoin can go higher even if stocks go lower as well?
Yeah, I can see it. I think the upside of Bitcoin is obviously, if you're talking about like a massive risk on environment, I think the upside of Bitcoin, especially in this new regulatory regime, is a lot higher than it is for equities. And so it comes to a point where it gets to a level and some floor where someone is like, or a bunch of people are like, cool, we're just going to accumulate Bitcoin here at these levels, because when the policies come into place, and if the US does ever start buying Bitcoin and all that kind of stuff, it's going to go a lot higher. So it seems like that level has maybe been found, at least at the first iteration of it. And that is a very Bitcoin specific thing. It's not an equity specific thing. It's not even a risk asset thing. It's just a Bitcoin thing. Like there's probably a handful of people out there who are like, okay, I'm going to front run the US and potentially other sovereign nations in buying Bitcoin. And here's my line in the sand. I'm going to deploy X amount of capital here. So it feels like that level has kind of been found. Like it's very clear there's deep bids for Bitcoin once you get like sub 83K. And that to me says, yeah, we maybe do see some outperformance of it, because, we've been outperforming on days where stocks are red, and Bitcoin has actually held up pretty well. So I would attribute that to new Trump crypto policies and the potential of countries buying Bitcoin and people wanting to front run that and deciding this is the level to do it.
Yeah, Arthur Hayes came out this week and said, who had been bearish all the way down, actually had a good call for once, came out and said 77K thought actually was the bottom when we touched it then. And he'd been calling for 70 to 75K Bitcoin. On a technical side, Bitcoin is hanging out right at its 200-day moving average. So there's a lot of huge calls at the moment for like, oh, we're about to enter a bear market. Oh, we're not. Oh, we've got 12 months of everything going wrong. Oh, we're not. And as long as it kind of stays around this 200-day moving average, I think people can get wrecked thinking it can go either side. My gut is that Bitcoin probably will continue to outperform now, as we've spoken about kind of on this, in terms of dominance. I know there'll be pockets of outperformance, like you said, but I feel as though this is a market where in most scenarios, I still think Bitcoin has a pretty strong trend to it. And like you said, there's a lot of people that just want to buy it on a dip. I was actually thinking today, like, what are the top 5 catalysts that it could possibly be now? for 2025, because this week there are rumors of zero tax on crypto in the US, and I don't think that's very plausible. But it feels as though stablecoin regulation coming through. They've talked about that potentially coming by the summer again, so that kind of fits your narrative of something strong there. RWA regulation, it would be good to see more broad regulations there about putting securitizing essentially, or tokenizing assets, which are securities, on blockchain. Maybe you get another one of the big sovereign wealth funds buying a lot of crypto, maybe like Saudi Arabia, or one of the UAE states, or Qatar coming in and buying a decent amount. Maybe something out of China. Maybe we get something about softening of at least policy on the mainland towards China, or just some form of government policy which is going to be supporting crypto. And then the final one was like maybe not just like a micro strategy, but one of the big tech stocks decides they want to have some form of a crypto holding alongside Tesla, who kind of is known to having some. But these things all feel a bit more, I wouldn't say unlikely, but they just feel less certain when they'll happen. And they could never happen, or they could happen in like 3 years from now. Do you know what I mean?
Yeah.
So it does feel as though, even though there is all these catalysts, I think will happen at one point or another. I do think we're kind of in it will just get dip buyers rather than like aggressive buying. I don't think anyone's like out there aggressively buying. I think they're like, well, if it goes lower, I'll be the bid. But I don't know if people are like, oh, this is going back to 100K in the next couple of weeks, just because I just think that the fear is really there in macro. Wherever I look in macro, everyone is freaking out about China or about Japanese bond yields. I know Raoul like breaks it down just in like a purely M2 money growth equation, which I think is actually very easy. It like makes everything much calmer. But it's just interesting to see that that's kind of, I think, what's keeping a lid on stuff. It's like people are wary of something in macro about to break.
Yeah, it does. It does feel like that, doesn't it? It does feel like the fear is more on the macro side of things, and I'm seeing talks of like recession stuff now, etc.
Recession, like maybe, but
I mean, I don't see it, but like I'm seeing people talk about that.
Yeah.
Again, I don't know if all of it is just Trump kitchen sinking stuff to get things to where he wants to before they can just start relieving pressure with cutting interest rates. I think the one chart that kind of goes against all of the macro fears is the US money supply chart, M2, which continues to go higher. Yeah, which continues to go higher and has historically been a very good leading indicator for Bitcoin. And that's something that kind of maybe is like bucking the macro fears, I would say. Not that many people look at that chart. I guess like a lot of crypto people do.
That's the most bullish chart in crypto. Raoul shares it like every show he gets on, which is the leading indicators, or the like the money supply with a 3-month lag chart.
So we haven't seen that like correction of Bitcoin to that chart yet. We saw the correction of Bitcoin to that chart to the downside, which maybe had like a 1 or 2 month lag, but we haven't seen the correction to the upside. And again, like I'm not the sort of person who just thinks, oh, well, because that chart's gone up again, Bitcoin is eventually going to correct again, just because it always does. I don't usually think that, but it does feel like we've had enough good news and enough of a clear out and enough of a risk unwind, potentially lower leverage now for Bitcoin to just, I could see it just being up 10%, back up towards 95K without like for minimal move in equities. I could definitely see that happening. Yeah, exactly. And then that would kind of again be in line with that M2 chart. So
there's belief in that chart, I think.
There is belief in that chart, yeah.
It's just like there is just a general belief. So people buy in the same way that you're like, oh, people are going to buy because they're expecting, sovereign institutions to buy. There is just a general belief that like, oh, we'll just follow global liquidity because that makes the most sense, because there's been correlation for so long now. So if you want to be bullish, just I think Raul did a Q&A actually during the week. Go listen to that, where he just goes through all the major charts that they always look at, the ISM and the 3-month lag to global liquidity. And it does feel as though just you can just have faith in that. One thing that has also been up only in crypto has been stablecoins. So we've hit 230 billion now, which was another all-time high in stablecoins. They were up, I think, 15 to 20 billion already this year, or like year to date. And it's a figure that, interestingly, like maybe this goes against the whole narrative for original blockchains, or at least for Bitcoin. But are these L1s just now going to become places to trade or move stable coins? ETH was even like touting it that as it's one of its main use cases this week, and there's a lot of ETH maxis basically being like, "Oh God, we've just become a way for people to move the dollar." Do you think this is also kind of becoming the age where some of those dreams die away from Bitcoin? That you'd have like not sovereign, but like you have independent currencies. Is ETH just a way for people to like transfer stable coins? Basically, is that the real use case here, or like are we giving up on some of the dreams? I think of some of these L1s.
No, I think the dream of programmable money is still a real dream. We just have to
do that with stablecoins.
Yeah.
There's a lot of questions about that at the moment. That like Bitcoin's got this gold narrative, and look, obviously we do a lot of DeFi stuff. We use the collateral of some of these assets quite a lot, but it's interesting that even the biggest blockchains themselves are basically pointing to that being like their number one use case. There's people saying that stablecoins could go up to like $1 trillion this year, like the amount of stablecoins if RWA and stablecoin regulation gets passed. And then you start to question like, well, is it just Bitcoin and stablecoins?
I don't think so. I think I think it's important to recognize that even though ETH hasn't moved a lot, there's still a ton of activity that happens on Ethereum L1, ton of activity that happens on like Arbitrum in terms of DeFi. There's still a lot of activity that happens on Base. I think like the idea of activity is separate to the idea of price appreciation, if that makes sense. And you would sometimes think, oh, if activity is going through the moon, like the price of it will go up. And sometimes that does happen if you think about Solana, etc. But there's a ton of, I guess, like a lot of it is stablecoin stuff, but there's a ton of like DeFi, NFTs still have like their place on Ethereum, then it's still a relatively active ecosystem, even if it's not quite to the heights of 2021. So I don't think these dreams are necessarily dead, but it does raise a big question as to what drives the price higher. And
well,
that's a separate thing. Yeah,
they become gas fees, but like even for the L2s for ETH, there's been talk about maybe like Base could move to stablecoins being the gas fee for an L2, right? And then that's a dangerous narrative for some of this stuff. I don't know. It's not something that I believe in. I'm just seeing it, and I can tell you that if there's if in a year's time we have Bitcoin worth what 2 to 3 trillion and stablecoins are worth $1 trillion, or bumping up against that, there's going to be a lot of questions, I think, about like what are we doing here with a lot of them. So, or at least like the idea that they are currencies and not just gas tokens, I think might be called into question more and more over the next year, particularly as you start to put other real assets on chain. Like if RWAs become big, there's going to be questions about other coins as well. I don't know. I'm still a believer. I like the ideas of our own native currencies, but I can see this trend. I can see the foothills of this trend happening, and I can tell you that's going to be the narrative. That's going to be a strong one in 6 months. Who knows?
So what with this kind of price action, and if this continues for the next, I don't know, like let's say continues for another 3 to 6 months, what are you doing? Like, is there anything that you're looking at apart from the obvious boring thing, which is just DCA majors? Is there anything that you're looking at which you think could create some alpha here? Is there anything you maybe have your eye on, but maybe haven't put risk on? Are you even bothering to look for that stuff, or are you just kind of taking a bit of a break from markets? Like, what's the?
I mean, I've got a lot going on.
You do have a lot going on. Yeah.
So I have been, I was in JLP, and then I shifted a lot of that more into Bitcoin. I've actually been in my degen stuff. I've been doing a lot of DeFi style farming, and some of that's actually been delta neutral. Some of that's been like on things like Sonic, for example, you can earn like 300% delta neutral doing some of these strategies. That's not been a bad thing, and you can get like the airdrop and stuff. So like, I've been doing some of that, but because I had so much going on in personal, and then it's really I moved more. I went from defensive to a bit more risk on, but via Bitcoin, and then just doing some degen stuff, but not like meme coins. You know what I mean? Degen DeFi is what I've been basically paying attention to, which I've tried to get you in a couple of times, but you've never really been a DeFi guy.
No, I think the problem I have with Degen DeFi, number one, I've never made money on it in the past. Number two, if you live somewhere where you pay income tax on crypto staking, that becomes a very painful thing to do, because if you have staking income, for example, you owe tax on it at the time at which you get the interest. So presumably the staking income is in the native token. So if it's worth $10 and you're getting it paid like every single, in real time, like every single second, you owe tax on the value of that coin at that time. Now, unless you're instantly selling 50% of it each time you get it paid, you're going to have to calculate some tax amount, and then you're going to have to owe that amount later on. So I think where people sometimes get tripped up here is like, you make, I don't know, $500,000 worth of staking income based on the token price at the time at which you got the income, and then the whole thing just goes down, which eventually all the Degen DeFi stuff eventually does, but you didn't sell your token in time, so you have this massive tax bill, but massive income tax bill, but what you're trying to sell is worth a lot lower, and in many places you can't offset your income tax with capital gains tax. So it's a very risky game, I think, if you live somewhere.
If you don't sell the rewards, I agree with you. That for you it could be more difficult, like if you don't sell the rewards. But there's definitely some interesting stuff there, like, which I've been more paying attention to. But I've definitely been setting myself up for a longer period here. Like I definitely did not nail the exit. Like from Trump into Melania, like at least I went more defensive after Melania. But yeah, it feels like we could be here for a while. There has been some degen stuff going on. So I don't know if you've been paying attention to, money has definitely been leaving Solana. That's kind of clear, but it's been the two blockchains which seem to be seeing the majority, or maybe three. I would say BNB. Interestingly, like BNB, whenever, because I do a daily newsletter, go check it out, mandaminutes.com. And all the runners at the moment, the daily runners, as we speak in meme coins, are all on BNB. There seems to be a little bit of a season going on there, and that's been one asset since CZ kind of got out of jail, and he's definitely been pushing it a little bit more, and some things they're doing there. That's one that's held up. BNB is basically flat to where it was in March. So
wow.
It's held up remarkably well, and it's kind of held up the best over the last month or so. It looks like on the 5th of November, again, it's also kind of where it was right now. So it's even slightly even more than that. So it's that one's held up pretty well. Tron as well, which is another one of these Asian style blockchains, which has really been used for non-sanctioned countries under sanctions to move stablecoins, but they've been building out a bit more of a degen aspect for them. That they partner with Pump Fund for their new Pump Fund launching their own DEX. So you're going to see Tron go on there, and then I would say some of the degen DeFi stuff. So like things like Sonic has seen a lot of activity. Like that's gone above $1 billion, even 1.1 billion TVL now. So those are the three I see a lot of activity on. I don't know if there's tons of money to be made. Like what I just said, like it's more like longer term strategies, or maybe you do catch the BNB runner of the day. A lot of them seem to be related to the Binance team. Like every single week, there's a new coin which like CZ bought or is linked back to the Binance team. But they have this thing called Binance Alpha, which I'm sure you're aware of, where they like list new coins. A lot of those new coins over the last month or so have been BNB
coins, yeah.
So there's been like a big shift to right. Binance is actually being way more aggressive on listing its own native coins, and you get a Binance listing, your coin kind of goes to 200 million. It's kind of par for the course for most of these. So there has been like that's been a trend I've seen. And I know some of the guys that we were in chats with who kind of do trading in the trenches, they've largely moved over to BNB. I don't know. Do you think that's like really worrying for Solana, or do you think Solana still looks okay here at like 125-ish?
I don't know if it's necessarily worrying for Solana. I do like Solana here at this level. I think it's quite attractive. Obviously pump fund revenues are down a lot. The AI sector is down a lot. So the kind of the two big tailwinds it had at the beginning of this year are significantly weaker. And it's quite clear to me that Binance have obviously put some capital behind some of these BNB tokens and stuff, and are trying to take this opportunity to bring the activity back to Binance Smart Chain. But I think it's too premature to call the death of Solana. I think we've seen people do it. Yeah, we've seen people do it time and time again. I do expect it to have a resurgence in activity, I think. And you'll probably see some point this year where, some of these are old, I think you've had a big meme coin crash on Sol, and stuff is down 80, 90%. But I do think you'll have some sort of a bounce at some point in time during this chop, actually. I do think you'll have like some sort of a meme season or an AI season during this chop, which is likely still to be on Solana, I think.
So what's crazy is Solana, to put in perspective, right, is about to be flipped by USDC as a stable coin. Its market cap is 64 billion. BNB is at 90 now. So it's full 50% above it. XRP is more than double the market cap of Solana right now.
Yeah.
So obviously it's way too late to be like, oh yeah, watch out. But like it really has. The one that really is interesting to me is that like you're starting to see major blockchains, like I just said, get flipped by stablecoins. XRP is the third biggest crypto again. Sorry, no, USDT is the third biggest crypto again at 143 billion. There's a world, where it goes Bitcoin, USDT, USDC. I don't think that's that crazy, genuinely. And I think it's something that we could see at the end of this year, which would be, I think it would just really startle some people, I think.
This feels like you're now taking the path to becoming a Bitcoin maxi or an anti everything else. Like,
I'm just saying I can see it happening. Like, I'm not a Bitcoin maxi, but there is a time to own Bitcoin, like I've just said. And there's like, in these periods of it going sideways, like if we start to see stablecoin regulation happen in the US, which seems very likely by the summer, and then you start to see even RWA regulation happen, those assets aren't priced in ETH. Those assets are priced in dollars, and you'll see more and more dollars come on chain. And I just think it's going to be an interesting narrative here. Like it's something that I think is going to question a lot of crypto for a lot of people who came in and thought like, right, Bitcoin, and then we're going to have tons of other currencies, our own native currencies. Well, what we're starting to see is like, if you include all stable coins, right, which is 230 billion, that just flipped ETH. It just flipped ETH's market cap. And that's just something to pay attention to.
Yeah. But there's nothing you can't, it's not a trade that can be expressed, is it? Really? Like how would you?
Yeah, just own stablecoins. I mean, some of the biggest M&A you're seeing right now is people buying stablecoin companies, because most of these don't pay us native yield, right?
by the Circle IPO. Then
they just clip the coupon. Some of them have in the past said they would do that, but I don't know. It's not something that I really have like a strong view on like how to trade it. But other than I see it happening and I can see where this will be in 6 months. The only things that are up only right now are stablecoins. And I actually think that will accelerate. Like I do think we could triple that figure after that stablecoin regulation comes in the US. So there's going to be maybe the crypto total market cap can go back up to like all-time high,
through stablecoin.
But it's through stablecoins. And everyone will be like, oh God, this is the worst possible way that could have happened.
You've really ruined my Friday.
I'm just saying, I'm seeing it. Like you'll hear about it in a few months. Trust me on that. But yeah, one thing in that world, I do still think you can have like runners, like meme coins that could have a period, right? You might buy some of those coins. I think what it really questions actually is the coins that are non-culture related, the coins that are like just meant to be coins that you would own and you buy stuff with, which is a lot of the L1 coins really, rather than like the culture coins or the that's what I'd be more worried about, which is other than maybe their use case increases with gas. Like Solana has done a very good job of making sure that Sol is like at the heart of everything, right? So you can imagine a lot of the value still accrues back to that in terms of like the validators. So there's still value there, but the number one collateral for DeFi could very quickly become stablecoins here.
Maybe what we need is we need a meme coin of USDC or USDT, so we can actually have some capital. I know they have that in the past, but something so we can actually have some capital appreciation. Otherwise,
yeah. So one thing that has happened in terms of the other degen stuff is it's NFTs. Have you seen this like resurgence? It kind of happened.
Yeah,
it happened in a few different ways over the last week or so. So we've had Sam Spratt, who's probably one of the best known artists in the space, did a very, very successful drop. Raised, I think, $2.5 million on the first drop, and then the assets have all done like a 2 or 3x since they were released. And he does like these gamified drops with like almost like a competition or a prize at the end of them. In previous ones, it's been one-of-ones. And his one-of-ones go for at times millions of dollars. So it's seen as like quite a fun way to do it. And then just yesterday we had Pudgy Penguins announce a Pengu NFT ETF, which will include Pengu, their coin, but also the NFTs. And I've just generally seen more activity from NFTs. You've seen a bit of an ecosystem happening on Abstract there, which is also linked to Pudgy Penguins. You've seen some of the other collections start to like rally back, and definitely art as well, like taking a bit more center stage. Do you think that will be the thing again? Do you think that's what we're going to be playing around with the next 6 months to trade it around? Are we doing a REKT ETF? Have you spoken to Luca?
Yeah, that could be interesting. I'm curious to see if it gets approved and what the follow-on demand for it is. But it's an interesting way and it's a smart way, especially for a brand like Pudgy Penguins, to open up investment into what you're doing to the masses who maybe don't want to touch crypto. But if you haven't IPO'd, if you don't have public equity, if that makes sense. And obviously like a meme coin isn't any form of equity, but it does move on sentiment. And if Pudgy Penguins do really well, I'm sure the price of Pudgy Penguins NFTs will go higher and the price of Pengu will go higher. So I think it's a really smart thing to do to open up potential investment for people who are perhaps not crypto native, but start to get familiar with the brand and want to express a sentimental trade in it, I guess. NFTs coming back. We'll see. I'm still not convinced we'll ever see the mania we saw in 2021. I think you will continue to have pockets of performance. You had obviously Sam Spratt stuff do really well, and then you had something called the Good Vibes Club, I think it was, a new NFT mint that did really well after the mint as well. So it's nice to see some activity and good price action return there, but you know, specifically Sam's thing, like I feel like that's very unique to Sam. It doesn't really matter if he was in a bull market or a bear market, it still would have done really well. And so it's hard to extrapolate that to the rest of the NFT market. And I still don't think we'll ever see the same mania we saw in 2021, but we may have these pockets of performance now and again. I don't know, maybe if there's absolutely nothing going on and people start coming up with cool creations again and stuff, we could see it. And I think that feeling of like minting something that's unrevealed and then finding out what you get post reveal, I think is a very novel feeling that won't ever really go away. So maybe there's a chance, maybe there is, but I think it will take a lot to really. It will take a few projects doing really well, going crazy for people to want to jump onto the bandwagon again. I think.
Well, people have got to do something. Like what we tend to see in this sort of market is
they do have to do something. I agree with that.
Like everyone's still a degen, so and as much as I think, you can do some degen DeFi stuff, and it feels as though meme coins, people, at least on Solana, like people are too scared to get back in the water right now. You're seeing, I don't know how many times we can do like CZ bought this coin, it's going to get listed on Binance. Like I don't know if that's like a fun meta for people, like enough. So I think that people will find something that they want to gamble on. Do you know what I mean? So
I do agree. Like the gambling never stops. The gambling definitely never stops, and eventually there's something that a handful of people make a lot of money on from gambling, which then brings the masses back in. So I do expect something like that to happen, which is kind of what I was alluding to at the beginning, talking about the chop and it's almost like you want Bitcoin to stay stable for gambling activity to start happening, because then people feel like they want to sell their Bitcoin to gamble the next thing if it's not really moving. So I wouldn't be surprised if that happens. If it's NFTs, I'm not really sure, but could be. Never say never.
Yeah, I'm as I look through the different stuff that people are doing, that's the space where I see people having the most fun again. I see like in meme coin, you see like fart coins doing okay, but other than that, it's tough out there. And I think some people are doing stuff on these prediction markets a bit, like Polymarket and Myriad and Kalshi, but I think maybe we see some cool NFT stuff. The other, like the GameFi stuff as well, has generally been destroyed during this period as well. There's been a lot of like criticism again for like whole teams missing the bull market to release products, and we're going to be another 3 years before a AAA game comes to crypto. So I don't know what else we're going to do. Yeah, I think that's generally it for what we were going to see this week. It does feel as though we could be doing this show for a while, where we're looking at smaller stuff, and Bitcoin's probably sticking around 83K. Does feel like that's the best, still has the best risk reward out there at the moment, unless you're going to try and do some really like degen DeFi stuff like I was talking about before.
Well, we did podcast every single day throughout 2023 when nothing happened for
that was rough. Yeah, that
weeks and months. It's almost like you'd rather prices go down so you have something to talk about. But I literally have no doubt that something in the next 2 or 3 weeks, something's going to come up, which everyone will be like, "Oh, damn, why didn't I see that?" So I would encourage
AI. I do think AI has probably got one of the better shots of coming back and coming back strong.
I still believe that, and that's the only thing I've really been adding to on dips. Yeah. I do think there's a lot of the bigger projects there are still building and creating stuff, and I think you will see new launches come out in the next few weeks. I just don't think the AI season and the AI rally we had November to January will be the only time it happens. I don't think it's going to just go away. So
I would agree.
That's something I think is worth keeping track of, even if you don't have risk in it. But that's sort of been like my altcoin bet outside of majors.
All right. Well, shall we have back on the Arch Public, guys? I know
let's get
with you last week. Seems like a good time to talk about what's been going on in Bitcoin, what's been going on with the sort of trades that you can put on. Obviously, we're partnering with them at the moment, and I don't think there could have really been a better time to partner with these guys. Bitcoin basically staying exactly where it is and just going up and down, and you're getting to pick out trades.
Yeah, let's bring on Andrew and Tillman. Welcome back, guys.
Listen,
Hey guys.
there is clearly an alpha money moment from Mando moments ago, and he said, "Listen, I'm looking at Fartcoin and it's doing pretty well." That's the money shot for the podcast right there. I'm looking at Fartcoin and it's doing pretty well. I'm like, man, this is why I listen to the show. This is why I'm here. This is why I listen to the show.
Fartcoin is looking like a multi-cycle meme to me. That's all I can say. It's the Pepe.
Meme.
It's the Pepe of next cycle.
The Pepe of next cycle. I like it. Well, thanks for having us on, guys. You know, you're right about these moments of boringness. Will we be at 83 in 6 months? That may be the case. I don't know. But Arch Public, we build products that are here to take advantage of volatility. Bitcoin just overall over its life cycle has been 9 to 25 times more volatile than traditional markets. So again, in the past week, we've seen two buys way down at the lows, 78 and just at 80. And then we had just an extraordinary execution at almost 87 at the top a few days ago. And again, these are algorithmically automated trades, which you can't pull off on your own unless you're lucky or you're not asleep or you're not at dinner. This is all happening with your hands off. And so true to Mando's point, when you're in these moments and it's not just number go up, having a product that you can rely on to generate some level of alpha, to generate some level of return is important. The other point that Mando made that I think is probably prophetic. Are we at a point now, based on the regulatory environment, where we end up with the top three tokens being Bitcoin, USDT, and USDC? I would put money on that, to be honest.
I would as well.
Yeah, I would put money on that. Tillman, you could talk to that a little bit more.
Well, I just think that the Bitcoin dominance number for me has been the key indicator of this cycle. I think this cycle's, especially on the Bitcoin front, it's being driven by institutions and not so much by retail. I think retail's been bored with Bitcoin, honestly, for quite some time now. I think that's the point of having automated tools, is to cure your boredom, but still get done what you need to get done. You should never be, a slave to your emotion, whether it's exuberance or boredom, in terms of making decisions on a day-to-day basis. And I think when you see the volatility of Bitcoin enter into a real choppy range, some people, don't know how to trade that, and so they push their money other places, and they start to sell their Bitcoin to kind of get those emotional highs that they're used to when Bitcoin's on these parabolic moves. And in my experience as a trader, those are the times where you refocus your energy on your strategy and what you want over the next time period, and you retool that into something that's going to be executed hands off, because the emotional side of trading is really the enemy here. Bitcoin's chop is an opportunity, just like Michael Saylor says all the time. It's a gift. It is the gift of Bitcoin, is the volatility of it, both up and down. And so having something that's sitting there waiting for that volatility and executing on it is an opportunity that most people don't take advantage of, I guess, in the Bitcoin space. And it would cure a lot of the boredom, because there's a lot of money to be made in chop, to be honest with you. If you know what you're doing, there's a tremendous opportunity, because when you look at how many times Bitcoin over the last 6 months has crossed 90,000, for example, a lot. And look at the variance off of that $90,000 price. It's been plus or minus, 18,000 on each side of it almost. That's a lot of range, and that's a lot of movement in a tight period of time. So take advantage of it.
Yeah, I agree. You feel like you're on the front foot with this sort of stuff, rather than just like being reactive. Can we maybe go through what trades were done this week? I saw you tweeted out that you've got some like dingers of a trade. It would be good to maybe look at like what you could have done.
Yeah. Let's take a look at it. If you look at the tweet that I put out, there's a couple things to discuss. One, in that time period, over a 9-day period, there was a purchase, at 78 and change, and there was a purchase almost right at 80. And then there was a small sale as it bumped up to 84 and change. And then there was another sale that happened up at right around 87. So the commentary there is this: our arbitrage strategy, it's a 2.25x long bias. So every time you're making a purchase at that 78 and 80 level, you're buying nearly 3 times as much Bitcoin as you sell whenever there's a sell signal that goes through and you sell a little bit. So you're accumulating Bitcoin along the way at price levels that are beneficial to what you're trying to get accomplished. And then you're generating a little bit of cash yield. So beyond the levels of 78, 80, and then sales at 84 and 86, we also put out a case study that you could find at our website, archpublic.com. That case study shows you that if you're using our arbitrage strategy as well as our intelligent accumulation strategy, which, by the way, our Bitcoin algo is not just some binary output and only does one thing. You could be running 2, 3, 4, 5 strategies at the same time, a truly institutional tool. But if you're using those both at the same time, this is a question we get every single time we do a demo for folks. Well, does this really beat buy and hold? Like, if I buy Bitcoin, hold it for 4 years, I should have a lot more money. Does it beat buy and hold? So we put out case studies that show 4-year timeframes where our arbitrage plus intelligent accumulation, our algo, absolutely crushes buy and hold. So if you put in 100K 4 years ago, you'd have 185K now at buy and hold. If you put in 100K in our algorithms 4 years ago, you'd have nearly $300,000. So it's 2x your return. And by the way, it's a lot of fun along the way, right? You're taking arbitrage stuff, you're generating cash yield. You can take that cash and do whatever you want with it. But if you play it the way that we've set it up, you end up with significantly outperforming, buy and hold with the asset itself.
Yeah, so that's quite.
Yeah, go ahead.
You go.
I was just saying, it's just the last 3 or 4 weeks. It's just incredible, like how perfect the environment is for it. And I have the arbitrage strategy on, and it's just like, I've got these like crazy prints of buying Bitcoin in the 70s, like 80, and subsequently selling it at like 85K, 87K, and it's like it would have been impossible for me to humanly do that, I think. So it is. If you spend, yeah.
If I'm not mistaken, the 87K sale print, based on the time difference, you'd have been asleep.
Yeah, exactly.
Right. And that's the value and the power of a tool like this. Is the stamina is way beyond the stamina of a human. The ability to use zero motions way beyond the ability for a human to do that. And again, then, even if we move out of a volatility range bound type of deal, there are other stock versions of the Bitcoin algo which will significantly benefit from that. So if you're using arbitrage, which benefits from volatility, and you're using intelligent accumulation, that accumulation part is going to do extraordinary things when there's a lack of volatility or when there's a sprint higher, right? So you have the ability to work with our team and say, well, I want to get this, and this accomplished with Bitcoin or Ethereum or Solana, by the way. And I want to do it over a 6-month period or a 3-month period or a 2-year period. Click, 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 click. Your hands are off and you're just watching it with your phone. It's extraordinary.
And really seeing is believing. We could spend all day talking about the nuances of how automation gives you an advantage over when you're trading manually. I don't know if you noticed this, Ovi, but if you look at your charts, the exits are always on green candles and the entries are always on red candles. That's a very slight nuance that most people don't pick up on. but it's extremely hard as a human being to manually be selling into the buying pressure of a green candle. And conversely, it's very difficult to be buying into the downward pressure of a sell-off. But that is where, quick execution and taking advantage of those turnarounds or those exhaustion points in the market. And so if you want to do it on a shorter time frame, you can put it on a 4 hour or 6 hour or 1 hour, and you can measure the velocity of those indicators and enter those positions on a much shorter time frame. But you can also do it on a daily, monthly. So you can customize it, to Andrew's point, to not only the individual outcomes and the timeframes that you want, but to the market conditions that are best presenting themselves at any given moment. So if it's a real trending, choppy market, you can have the vast majority of your trading capital operating in some sort of a trading arbitrage manner inside of that trend. If it starts to pivot into a bull run, then guess what? You've accumulated during the arbitrage all of the losing trades that you're going to essentially capitalize on during that run. But you're also going to be able to then change your settings to create bias for that bull run, so that you're buying all the way up the ladder and creating a new rule set and a new structure as it pertains to a buying schedule.
So what are the different strategies that you guys have? You said like, is it multiple strategies that you can invest in, or how does it work?
Yeah, so if you download the free product, you can explore. There's about 4 different stock strategies right now that you can operate across 3 different symbols: BTC, ETH, and Solana. We'll be adding XRP here in the very short future. And so if you take your allocation and divide it up to your individual needs and or desires, there's an infinite number of strategies that you can deploy based upon dividing up that capital. So again, to Andrew's point, let's say I have a deep desire to accumulate Bitcoin, and I have a set end date that I need to accumulate it by. Well, I can set a schedule, and I can dollar cost average in an intelligent way, not just blindly at a given date and time, but when the market dips, buying through that schedule. But at the same time, I can have a set schedule for a range. Let's say I have a set number of dollars that I'd like to place in Bitcoin between 50 and 60,000, and I'm convinced it's going to go there. Well, I can create an entire schedule of dozens of purchases within that range at different dollar amounts and set it and forget it. So that if I'm asleep one night and we see a nasty wick go into that range, I've capitalized on something that, I couldn't otherwise have capitalized on. So there's an infinite number of ways to set it up. That's kind of the fun of it. But if you download the free version and start playing around with it and use our videos and our manuals to familiarize yourself with it, it will definitely bring up a lot of questions. Schedule a time to talk to us. We've got a lot of great folks that can jump on the line with you, share a screen with you, and show you how to work all of the feature sets and all of the different ways to trade it differently.
To give you exactly the number, if you just used our stock strategies inside of the Bitcoin algo, there's currently 4 stock strategies where you just click a button, that strategy is overlaid on top of your capital, and it runs. There's arbitrage, and then there's 3 versions of intelligent accumulation that have different parameters in them and are acting in a different way to accumulate Bitcoin for you. Same with Ethereum, same with Solana. And a reminder to everybody on this call and watching, you can get involved here for free. It's 10K in annual transactions. So you can have the Bitcoin algorithm, the Ethereum algorithm, the Solana algorithm, all for free. And we're also running a pretty serious promotion right now, where if you download our software, our Bitcoin algorithm, the free version, if you sign up with us and you follow Triarch Public's X account, you're going to be in a drawing to get 2 industry passes to the Bitcoin conference this year in Vegas. So sign up for the free product, follow our X handle at Triarch Public, and we're going to give away 2 free industry passes, as well as you'll be invited to our VIP dinner that we have with some folks and our customers there in Vegas. A pretty amazing giveaway here over the next couple of weeks.
Bitcoin conference in Vegas this year is going to be fun,
Crazy.
probably aggressive ones.
Yeah.
Gonna have to see if I can make it out for it. But you have any plans to go, Mando? Bitcoin Vegas? And
I've looked at it. They reached out to me actually. So Bitcoin Vegas, it does sound pretty wild. 300,000 people apparently going to be there.
Wow.
It's going to be nuts. They Tillman and I are going to be speakers at the Bitcoin conference this year, and I don't know. 3 days in Vegas is enough for me. I got hell at that point. I can't imagine being there for 4 or 5. You just everything changes. You end up in a time warp that you can't feel like you can get out of.
It's going to be an exhausting conference, I can assure you. But I will say, based upon Trump speaking last year at the conference, I think there's a new precedence that's been set in terms of the level of speakers that will be on that stage. I think we're going to see a lot of government officials up there. I think it'll be a good time. I think it'll be the first Bitcoin conference where we have clear regulatory boundaries and everybody's pretty confident that we've got wind in our sails, and should be a good time for sure.
Yeah, well, I agree. I think hopefully Bitcoin 100K there, and then who knows how wild Vegas will be that period. All right, well, it was great to have you on again, guys. Thanks for taking 15 minutes. Obviously, go check them out. Arch Public, you can find them on X or on their website. And like I said, OSF's been using the strategy to good effect. So you've got a great customer there already.
Love it.
I think that's going to be it for us then this week. We will see you again next week for hopefully Bitcoin at 83.5K or above. And yeah, thanks for tuning in. Sorry I missed last week.
Thanks, guys.
Thanks, everyone.